Hi, everybody. Welcome to this week's Thrive in China Roundtable, where we are looking at 5 reasons to switch your company to a China Limited company. Now, the assumption is with today's presentation that all of you that are watching are actually in the phase of having a representative office in China and or other types of structures, either transacting directly from your head offices, having a representative office, or having relationships with intermediaries in China that are actually fulfilling certain transactions or business dealings that you would like actually to take control over, right? So why would you go from these simple structures that initially made a lot of sense to actually thinking about formulating a limited liability company in China? Now, let's face it, representative offices in the past, or even just transacting directly from headquarters or using intermediaries to fulfill certain service transactions, is always an ideal starting point for any business that is looking to do business in China, right? It gives small, medium-sized companies, it gives entrepreneurs access to this market without actually fully committing to the market, whether it's from an emotional standpoint, whether it's from a financial standpoint. It's basically minimizing the liability that you are going to have in the Chinese market. Today, we're going to look at 5 reasons as to why you should be switching your current business model, which does not allow you direct access into the market or doesn't give you the full flexibility that you need to grow your business in the market, okay? So we're going to look at these 5 reasons, which are actually all pretty common sense reasons, and we're going to delve into that a little bit today. Number 1 reason for switching your current business model or the current structure that you're utilizing in China, either through a representative office or through intermediaries, is that it is necessary for growth. We saw a fundamental increase in the number of companies that actually switched their business models in 2021. It was an amazing growth. And I say this because even with the COVID pandemic and even with border control restrictions, companies were realizing that China, although the international borders were shut, China itself was growing phenomenally, both in the consumer market, digital market, educational market, medical device market, etc. And so they wanted to switch their business models to give them a proper foothold, a concrete foothold into the Chinese market. Now, you've got to keep in mind that these old business models suited you because they offered less risk. They offered less liability. They were business models that were created to start doing business in China. But fundamentally, your business has grown to a certain level, to a certain size. It's continuing to grow. It's continuing to scale up. That these business models have to pivot in order to be able to attract that growth. So what are the fundamental reasons for actually switching the model in order to be able to attain that growth or attain that scaling up? Predominantly, the first one is around VAT invoicing. Hold on, I'm just adding a couple more people into the session. The first one is actually around VAT invoicing. So, I want to touch on a little bit the triggers that will make people switch to having a limited liability company when they are in this growth and scale phase. So the first one is VAT invoicing. They are tired of using intermediaries to support their local invoicing scheme. And they're tired of potentially paying a commission to those intermediaries to simply do the paperwork of the VAT invoicing. and they want to bring that work in-house. The other aspect is potentially these intermediaries, although they have promised the world in terms of marketing initiatives, supply chain control, they probably lack expertise in certain areas. And as a consequence, you want to build your own in-house team that you are training, or you want to expatriate people to China to fulfill those services, so that you have better clarity in the market and that you are not waiting for somebody to give you information. You are attaining that information through your own organization. So there are a lot of triggers. Another trigger might actually be revenue. You have hit a certain size of your business where it just literally makes sense to have your own entity, a own trading entity or service entity on the ground that helps you to continue to grow and to continue to scale. You have hit potentially a certain volume size of the business where you need better control over inventory management. And as a consequence, you want to do that in-house. It could very well be that you have to continuously employ headcount to support the growth of the business. And instead of doing that through an intermediary, it now makes sense to have your own limited liability company. So there's a lot of triggers that will potentially push you to switch from your current business model, which served its purpose during your startup phase and doing business in China or transacting in China, but is no longer servicing you to attain that growth and scale that you need. The next reason is it enables diversification. Now, what do I mean by this? I mean that your current business model is limiting you to perform certain functions that you would like to do in-house because you want to have control over your business. If you are currently in the business model of having a representative office on the ground, you cannot transact through a representative office. You cannot invoice, you cannot trade, you cannot actually invoice for services. It is purely a liaison office and a cost center. You might also feel that you can't hire the right people and the right skill set because of that structure that you have, which is this representative office. If the current business model that you have is that you are transacting directly from your headquarters, you might feel that in order to diversify your sales channels, meaning that you're working with a distributor who has served his function of building up the business, but now you need alternative sales channels, you're not going to be able to fulfill that directly from the HQ. You're going to need people on the ground to find those new sales channels, to find that network of clientele to be able to scale and grow the business. You might find that working with intermediaries, distributors, licensees, franchisees, whomever, sales agents, is great for the start of the business, but they might not have the appropriate licenses to bid for projects or to help you to scale and diversify your business. Meaning that if you then set up your own limited liability company and apply for the licenses that you need, obtain the skill set that goes into your own company, meaning you've got control over the whole organization, it is going to enable you to diversify your business, to perform additional services in the Chinese market, to search for new sales channels in the Chinese market. And I say this as something that is critical because enabling you to diversify only means that you will grow and scale even further. Particularly during this pandemic where a lot of people have had the old-fashioned mindset that we can't diversify and scale if we cannot be physically traveling on the ground to support that. I know plenty of companies that have not had HQ support them, but have actually built the team locally to be able to diversify, grow, and scale, and have continued to do so. Number 3, it unlocks further recruitment. Now, I've been saying this throughout the pandemic. You cannot go into China, you cannot implement your China business model, and you cannot grow and scale your China business model without people on the ground supporting your business. And potentially now you've got a rep office. With rep offices, there are limitations on the number of people you can hire. There are limitations on the number of foreigners you can hire, purely because it's supposed to just be a liaison office. If you're working directly from the HQ and you've got nobody on the ground supporting you, well, this will allow you to unlock further recruitment potential on the ground to support the business. If you're utilizing intermediaries, like I said, it's vital for you to do a SWOT analysis to really understand what the strengths and weaknesses are of your intermediaries. Are they great at supply chain, but they're rubbish at marketing? Does that mean that you need to hire somebody internally, a marketing manager, a brand manager, to help build and promote your brand in the Chinese market? Now, a lot of you might be using external outsourcing providers to do all of this, using media agencies, using distributors just to do supply chain, working with logistics partners only to do inventory management. But what I'm seeing is that as you are scaling and as you are growing, bringing certain key functions into your own business and into your own control will give you the transparency and clarity that you will need to further grow your business. Now, obviously, all of this comes down to finding the right people, the right fit, and the right skill set. Just like it is the same in terms of finding the right skill set, the right people, the right organization to outsource these functions to. But don't forget, there's so much more control bringing things in-house. Now, I just want to stop here at this point because you might all be thinking, well, we're managing the way we are. We're happy with the minimal commitment. I still talk to a lot of companies who say, Kristina, we do not want an entity in China. We don't want to have that commitment level. We don't want to have that financial risk level. We are just simply not interested. And they are always searching for alternatives in terms of outsourcing functions versus just taking that risk and setting up their own entity. Now, I get this, there's certain fear levels or potentially your board, it's hard to get through the board of directors in terms of taking this push to switch to a limited liability company. I completely understand that. But this is where your job function is to highlight what the positives will be in terms of workload, in terms of control, in terms of transparency, in terms of clarity, so that you can make decisions faster in a climate that warrants that decisions need to be made faster so that you can continually grow and scale your business. And I also just want to highlight, with the border controls getting better and better month by month, it is now possible for you to attain business visas to go into China. It's just you have to do the quarantine. You can expatriate foreigners now into China with pre-COVID regulations. I do see more and more foreigners being relocated to Shanghai now than in the last 2 years. So I see it happening. And like I said, having your own entity gives you that control, clarity, transparency over sending people over or ultimately building that team locally. One thing I don't want to underemphasize is that by having a limited liability company, it gives you access to lucrative government contracts, particularly if you're in industries or sectors where your main client is the Chinese government. Now, for most government projects, you have to submit tenders to the government. You have to bid for these projects, whether it's infrastructure projects, whether it's green development. I just got off the phone with a company that is looking to participate in a huge medical project in China. And all of these government contracts, you will have a better success rate when you tender or bid for these projects if you have a limited liability company already on the ground, because it gives the government the idea that you've got people on the ground, you've got customer service on the ground, and you have the ability to service them whenever they want to reach out to you, right? They're not reliant on you being in the UK, being in the US, being in Australia, wherever you might be. You have a physical presence on the ground with people on the ground. Now, I talk mainly about government contracts, but this also pertains to a lot of other things, right? The image of you having a formal entity on the ground. Again, do not underestimate having that image. When you are a consumer brand going into the Chinese market and you start promoting yourself on Tmall, JD.com, or all of these other e-commerce platforms, or you start marketing your brand through WeChat mini programs, Little Red Book, Douyin, other forms of social media platforms, don't underestimate the research that consumers do on you. They want to see that you also have a limited liability company in China. They want to see that you have customer service reps in China. They want to see, they're more inclined to buy from you when they know that you have a presence in China. So this push is not just for the government contracts, it's also a push for those of you that are in the consumer sector. When you're trying to attain a larger volume of consumers, this is going to help you having this formal presence in the market, because it shows commitment to the market. Everything that you've been trying to avoid with your previous business model, which was not having a commitment because you're not sure, everybody feels that when they're doing business with you. They feel that you're not serious. They feel that you're not there for the long term, right? But if you switch that business model to having an actual entity on the ground that portrays all of this, and obviously you need to have enough business in the market to be able to sustain the running of this entity. Okay, that's very clear in my mind. If you don't have that revenue level yet to be able to sustain and operate this entity independently without asking for cash from mommy and daddy at the HQ, don't set up a limited liability company. Do it that when you have enough China revenue readily available to support that operation. But just don't forget, by having this entity, it will garner more attraction. It will garner more feedback. It will give you more of a resonance when you are doing business in China. The fifth reason is that it's all about potential, which leads off of my previous point, okay? What is the potential in the Chinese market for you? It's a simple calculation. Are you there for the short term, or is your idea that the Chinese market is something that should be a long-term expansion plan? We are there for good. Now, in the media, you're going to read a lot of hoopla about the political situation between China, UK, China, US, China, Taiwan, China, Ukraine, China, Russia. Okay, we can all look at the geopolitical situation. It makes me nervous to travel even to the US, quite frankly. I don't know where to go. And where should I invest? The US doesn't sound great to me either, quite frankly, regardless of China's relationship with them. So as a business, I don't want to say don't eliminate the geopolitical situation, but I want you to think about your business. What is the business potential in China? I was having this conversation yesterday, actually, with a partner of mine, saying, we can't live without China and China cannot live without us. Even though every single country in the world is trying to become independent and to be able to sustain itself, I get that with the pandemic, with everything that has happened in COVID, with supply chains being affected, every single country is trying to be independent, China included, okay? The question that I have though is there still a market for your products? Is there still a potential for your products? What does that forecast look like? If that forecast is telling you that there's a long-term potential in the market, then why are you still sitting back and saying, less commitment, less risk, we don't want to invest, we're nervous? Why are you doing that if the numbers are actually showing you, and even maybe your competitors are showing you, that this market is vital for your business? You've got to look at the numbers. You've got to understand your business, and you've got to understand what the market is going to bring to you to make that step to switch from your current business model to having a limited liability company. And again, I can trigger off all of the advantages, right? The opportunities of having that company, being able to recruit, being able to trade on your own, having the full control over your entire organization rather than relying and depending on others. Okay, but none of this makes sense if you don't see the potential in the long term. So make sure that you are looking at your China forecasts. Make sure you are understanding that this potential is longer than just 2 years. It is a projection of 10, 15, 20, 50 years in market, because either the consumers are craving what you are offering them in terms of products, or you are producing products or providing a service that is unmatchable in the Chinese market. All right, so definitely think about the potential, and definitely think about bringing everything under your own control. So the biggest question is your time to go to the mainland, your time to become independent in the mainland. When is that? What are the triggers that are going to support your business to make you understand when is it your time to go to the mainland? Is it based on revenue levels, which will help to support this entity? Is it going to be based on the volume of the business? Is it going to be based on the fact that you need to issue VAT invoices on your own because you've got much more domestic demand and this is what's being requested? Is it because, and I haven't mentioned this business model, is it because you're producing in China and you now want to sell into China and you need an entity to support that in-country supply chain versus exporting and then re-importing? Is it going to be that you need to recruit people because the partners that you're utilizing have their own limitations and it is preventing you from scaling and growing at the speed that you want to grow and scale in? It's analyzing what that headcount looks like. What roles are they? Who are in those roles? Right? Obviously, it all comes down to finding that skill set and finding the right people and going through this tedious effort of recruiting. But you need an entity to support that. You need an entity to hire those individuals, right? Is it the fact that you want to diversify? That right now your distributors have the ability to only do one type of supply chain, but actually you want to add another 2 different types of supply chains because of product, service, whatever else? Is it because you want to diversify the business and scale? I had a lot of clients in 2021 realizing that they have to diversify their portfolio of products in China, making them pushing them then to set up an entity to be able to do that. Meaning that they keep their distributor network because they're excellent in what they're currently selling, but then with the new product portfolio doing that on their own. So when is it your time? When is it your time? When is it the right time to change that business model to give you the full freedom and opportunity to see what China can really offer you? So a lot of people didn't join last week's presentation, but I do want to emphasize the key tips from last week's episode, which is if you are joining today and if you are listening today, 5 reasons why to switch your current business model to a limited liability company in China. I want to go through these key tips from last week because maybe they will help you to determine whether it makes sense for you right now based on the potential and opportunities that are in the market. Partner with a local market entry advisor. Now, these are obviously corporate service providers, lawyers, but they're also business associations. So you can work with the various China country related associations or also contact the chambers of commerce locally in China to talk to them, gain advice from them. And they might even give you tips to talk to other companies that are in the same stage as you, but have actually done that push to set up their own entity. If you're going to go the route to set up your own entity, talk to a local incorporation service agent, which is different from the market entry advisors. Some do things in-house, others then outsource. Just be aware, not everybody can do incorporations in China. Understand your business activity. So from all the points that I highlighted just now, right? From it's necessary for growth, it enables diversification and unlocks further recruitment. It gives access to lucrative government contracts. It gives access to stable consumers. It gives you an understanding of the potential in the market. Make sure you know what you're actually going to be doing. So my tip with choosing your business activity is get a plain piece of paper and put pen to paper and understand what activities do you want to do in China? What products do you want to sell in China? Understand what is being done now, today, what needs to still happen to be able to grow and scale up. Determine the legal structure that fits you, okay? That fits your commitment level, that fits your financial resources, okay? That will convince your board of directors to do more in China. Understand who's going to own the shares in the company. And I add this because potentially one mindset might be, do we need to look for investors? Will that convince the board to push ahead for China? And that could be local Chinese investors, APAC investors, external investors that will help push the business and help you to switch this business model. Could it also be, let me go back on that point, could it also be partnering with the current intermediaries that you're working with and formalizing that in a structure? So for example, if you're working with distributors, sales agents, licensees, asking them, do you want to take that route of having a joint venture to push this business even further? Okay, another option. Understand where you want to be. Okay, now I say this because in your current business model, you might have your partners or your representative office in Beijing, Guangzhou, let's say Beijing. And actually, you've realized over the last 5 years of doing business in China that the key location for you will be Shanghai. Then it's about understanding, where do you want to situate your business? Because if your intermediaries are Beijing, that's a limitation that will help you to convince your board to say, you know what, let's just set up our own entity in Shanghai and build that space, because we see that that's where the potential is. It's finding office space, it's naming your company. And obviously when you're setting up your entity, it's getting all the paperwork done, applying for visas if you're looking to relocate people, etc. Okay. Remember, when you are switching your business model from the current one to having an actual entity on the ground, make sure that you have your business plan, your China strategy, as well as your budget validated by experts on the ground, so that they can help you well, first of all, they can validate every single point that's in there, or close off holes that they might find so that it helps you to convince board of directors. But also they will have the mindset of, okay, now how do you take that strategy from paper and execute it? And they might add certain things into that business plan that you haven't even thought about from an operational perspective of having your own entity. So I can't recommend this more. Make sure you get people on the ground to validate your business plans and your budget. About this whole switching business models from one type of business model to then another type of business model. And I'm doing this for quite a few clients myself recently. It's so much fun, plugging in these holes and bringing thought processes to people, especially from an operational perspective of what does that mean, having your own entity. Okay. So with those that have been watching live, I would love to know, what was your biggest takeaway from today? Just to recap, why would you switch your current business model to having a limited liability company in China? Ultimately, it is, I'm going to go through the different points. 1, necessary for growth, necessary to scale up. 2, it enables you to diversify. And we can define that in different ways. It enables you to diversify your product portfolio. It enables you to diversify your service portfolio. It enables you to diversify in terms of different supply chains, working with different partners. It gives you that flexibility that you need. It unlocks further recruitment potential, bringing headcount in-house where you have the control and you can provide the appropriate training. It gives you access to lucrative government contracts. It gives you the ability to be more successful on winning bids. But also it gives a sense of commitment and longevity with customers or companies, generally speaking, that you are working with in China. And number 5, it is all about the potential. If you have done your projections, your market research, your forecasts, and you can see that the potential of the Chinese market is not just over the next 2 years, but is over the next 20 years, this gives you that commitment level and understanding that you've got to do something now to be able to scale and grow in the Chinese market. So I'd love to hear what your takeaway was. What is your action plan? What are you going to plan on doing after watching today's episode? Very briefly, how you can work with us and what we do is we do all of the administrative services, everything from brand advisory, trademark, validating business plans, budgets, incorporations, ongoing support services for entities in China, providing corporate management, individuals within the corporate management structure, etc. So we offer all of these types of administrative services if you are looking for that. And if you are interested in setting up your own limited liability company in China, then just reach out. Happy to have a non-attached conversation to brainstorm a little bit with you on what your thoughts and ideas are. You can just email me at Kristina@woodburnglobal.com and we can schedule in a call to have that conversation. And just to finish up, we've got roundtables every week. Our next one is next Wednesday, where we're going to be highlighting 10 reasons why some businesses are not successful in the Chinese market. This presentation is truly around leadership traits, 10 leadership traits which lead businesses in China to not be successful. So if you are interested in that, come join in. If you are watching this live, it means you're already subscribed, so you'll get the notifications of all of these sessions that are up and coming. We've got exciting ones coming from October 5th, all about HR. We are all hoping that by October 16th, once the Lianghai session starts, there will be controls, etc. How that develops. You know, you're already signed up, so you'll know that these are coming up. But every Wednesday, put it in your diary. We've got the following topics that are coming through. So I do want to thank everybody for joining. If there are any questions, please just insert them into the chat box, and I will touch on them once I stop the recording. And thank you again for joining. So I'll be staying on, and if there are questions, just put them in the chat box, and we can have a conversation around it. Thank you very much, everyone. Take care. Bye.